Well, there you have it, folks. As I've been telling you for the past couple of months, the probabilities are that Bitcoin will complete the mean reversion to the 3012 RMLR on the 7-day time frame before it hits the third standard deviation band to the upside of the 3012 RMLR again. And guess what just happened on the new 7-day time frame chart of Bitcoin? If you look at it, if you haven't already done so, today, whatever day it is, 13th of May, I think, 2024, new 7-day time frame candle was produced, and lo and behold, what did Bitcoin do? I guess in the U.S. East Coast time was 8 p.m. when it happened Saturday night or Sunday night, right? Because the new candle starts at 8 p.m. and that's when the 7-day also starts. Along with the daily time frame. Anyway, if you look at the new 7-day time frame of Bitcoin, you will see the 3012 RMLR has risen, and well, the asset intersected with it. And what does that mean? That means the mean reversion is completed. Now, there is still a fairly high probability that the asset will also mean revert to the 30 power mean smoothing leg 10, which is currently still quite a ways below. Okay, so keep that in mind for targeting. If it does make a move down, that is a very good target for the time frame. If you look now also at the upside, well, those of you who were waiting for that moon show, well, maybe it happens, maybe not. However, I can tell you that it means that the asset has made the move that was expected, right? Up, down, or sideways, and it made it mostly down and a little bit to the side, and is now essentially on that rocket launch pad where it could indeed bounce from very nicely. So, as today is a Monday, and traditional markets in the US are open on Mondays, this Monday, do not be surprised to see some volatility and entropy making moves for low time frame trades. This is quite the setup that you want in many ways, right? When your higher time frames are all set and looking good for certain moves, and different time frames will have different readiness. Okay, all right, buddy. So keep in mind that the setups on the higher time frames do not always match the setups on the lower time frames. And what that means is there could easily be, and of course, obviously, setups of different time frames are not always lined up, meaning the higher time frame might be set up for a long, lower time frames might be set up for sideways moves or shorts, obviously, because the lower time frames are moving back and forth faster. But the overall bigger picture, right now, it's actually looking pretty good for Biddy, even if it dips down to that power mean. Right? First of all, if it dips down, it's good for short. Right? If it continues to rise, and the power mean will just meet it later, which also can happen. Then it's in a nice position for longing over the coming weeks. But again, 7-day time frame is a very high time frame. Now, why do I look at the 7-day? Well, it's just for the higher level picture of what's going on. And right now, it's got nice setups. Right? It completed the mean reversion. Well, what do assets do after they complete a mean reversion? What do they do? Eventually, what do? There's only one thing they do. Right? They either move away from the mean or mean revert. Right? Can it ride the mean for a while? Yeah, it can ride the mean for a while. But eventually, it's going to move away from the mean and then mean revert. That's all it can do. Right? That's what assets do. And the mean is, of course, the mean of returns, right? It can also ride the reverse mean of log returns, right? We've seen it happen. It happens all the time. Different time frames, different assets, doesn't matter. So, is it likely to blast off from where it is? Well, look at the other indicators. Look at volatility and correlation. Look at the AVR, right? That combines that and includes the volatility grade. Which, if you know anything about our indicators, you'll know our alpha volatility grade indicator tells you powerful information about the implied and historical volatility. So for all of you who like to, watch Tasty Trade and those guys, and you think, implied volatility is where it's at, well, that's why we made AVG for you. Right? The AVG includes the implied as well as the historical volatility. And I can tell you, those guys are tasty. They're great. Whatever the founders have certainly done very, very well, right, for themselves. But as a company, in recent years, those guys that run those shows, they tell you themselves, they're mostly busy doing shows, and not themselves necessarily trading as much. Although they talk about their trades and stuff, but they're really hosting a show or a bunch of shows, right? But they're a trading company in some recent years, had reported some significant losses. Why? Well, they don't even look at historical volatility. Right? They only look at implied. Well, you're missing out. At least that's what they say publicly, right? And we know because under different groups, we have tried multiple times to get them to look even at historical volatility and correlation. And you know what? They wouldn't. You know what that tells me? They're not necessarily as savvy as they think they are when it comes to trading. Right? Now, does that mean that they're not successful? No. They definitely appear to be successful. Right? And they build up a business that they then sold, right, to a bigger company. Made a nice amount, I'm sure. And then went ahead and rebuilt, or built a new platform. Their own Tasty platform, if you remember. Right? It's still a very popular platform for trading options and things. But ask yourself this: Why is it that they spent the last years mostly pushing their media channels and trying to get attention and growing their audience using the same old information that they had 15 years ago, but they haven't updated their method of trading, even given the new information that's available, right? When you learn something new that's actually powerful and useful, why would you not use that information to your advantage? Right? Why would you not update the way you do things if it's actually provably good and useful? And the reason is interest. Right? It's not that they can't learn a new thing. They're not so old that they can't learn something. Right? And even old people can learn things, right? Even an old dog can learn new tricks, so an old person can definitely learn new tricks. So, anyway, really not intending to bash on them at all. I'm just saying, I mean, at least they're giving people some of the information that's relevant. It's just that using implied volatility by itself, without any correlation or anything to historical, without historical volatility with correlation to price action or anything else, is, I think, missing out a significant portion of the proper way to trade volatility. But hey, to each his own. So in any case, like I said before, if you know how to use the VEPs, or if you don't know how to use the VEPs, either way, a fact is a fact. And Bitcoin has reverted to the 7-day 30-12 RMLR, and that is a very good setup for keeping an eye on it, because the most probable thing that we'll do next is move away from that mean. And you can see where it's got to go for the next mean reversions to happen. Right, it's got to go where it has to complete to the mean reversion to the 30-12, to the power mean 30, or the 30 power mean smoothing right 10. You can see where it's got to go if it's going to mean revert to the 11-10 RMLR. You have very nice juicy targets. And there it is, sitting right there in the middle at the 7-day 30-12 RMLR. So with that said, happy trading.